new listings in the GTA just dropped nearly 19% year over year, and that's 19%. Meanwhile, sales are still going up. If you've been waiting for the right moment to understand what's actually happening in this market, this is the video. I'm going to walk you through the Midtown. Obviously, we live in the Midtown area, so the Midtown Toronto numbers, not the GTA. But just wanted to give you some context to what's happening in the GTA. By the end of this video, you'll know exactly what it means for buyers and sellers right now. Inside the city of Toronto specifically, there were 2,377 sales in May. Average price just over 1.1 million. New listings at 6,400. Active listings 9,900. Average days on the market 26 days. To first listing 40 days. Total property days on market. So that would include if they're relisted. The city is running, I would say, hotter than the broader GTA in terms of the supply-demand imbalance. New listings in the 416 have been falling faster than in the 905. And you can see that in the data. The sales to new listings ratio for Toronto West is already hitting 39%, meaning for every 100 new listings, about 39 are selling within that month. Toronto East is running even hotter with a sales to new listing ratio of 40%. Now, average prices in the city by home type. Detached is sitting at just over 1.6. Semi-detached, just under 1.3. Townhomes kind of just over 1.1, and condos at 673,000. Now, I want to flag one specific signal in the condo data inside the 416. Condo apartments are still soft. Prices are down, I would say, meaningful amounts year over year in most of the districts, but volume is holding up, which means buyers are engaged when pricing is realistic. And that's kind of, I would almost say that's across the board. Like, I had a number of listings where we priced it properly and we had a lot of activity and sold it very quickly. So now they weren't necessarily condos, but I just feel like it does, that specific requirement kind of casts across all home types. You need to be priced properly. If you're a condo seller, this isn't time to anchor yourself to 2022 prices. If you're a condo buyer, your leverage is real, but I don't think it's going to last forever. But for now, I think you're in pretty good standing. All right. So what is the story in Midtown Toronto, the neighborhood we all live in, and the neighborhood I work in almost every day? So CO4, Midtown Toronto, which includes Bedford Park, Lawrence Park, North South, Forest Hill North, Yonge and Ag, those areas, which is obviously the area I probably know best. And May 2026 delivered a pretty interesting story. So there were 77 sales in CO4 in May. That's pretty solid volume for this area, I'd say. New listings came in at 184. Active listings were at 274, and the months of inventory is sitting at 4.2, which is balanced to slightly tight for a high-end neighborhood. Average days on market is 20 days. Now that's pretty fast. To give you context, the GTA average is 27 days. So CO4 is moving homes 25% faster than the broader market right now. The average selling to listing price ratio is 96%, which is pretty healthy for this price range. That means sellers are giving up about 4% from list to close on average. That's not a distressed market. That's a negotiation. Now, let me give you the number that I think defines CO4 or the CO4 story in May. And it's not the average price. It's the MLS Home Price Index. The composite HPI benchmark in CO4 for May 2026 is 1,979,300. And the year over year change is plus 0.67%, not minus, plus. So when the broader city of Toronto is down 5.4% on the home price index, and the GTA overall is down 6.7%, CO4 is essentially flat to slightly up on the benchmark price. The detached benchmark in CO4 is 2,565,600, which is up 0.19% year over year. Now, what does that tell you? It tells you that CO4 is holding its value better than virtually anywhere else in the city. The premium neighborhood premium is real. When supply is tight and buyers are selective, they go to the most desirable locations first. And that's, Lawrence Park, it's Bedford Park, Yonge and Ag, all these areas. So if you own in CO4, and most of us do, that's meaningful context for how you think about your equity. If you're looking to buy in CO4, you're not going to find the same level of price softness you find in, condos downtown, because the fundamentals here are different. So before I get into buyer and seller takeaways, let's give you a quick macro snapshot, because I think this matters. The Bank of Canada's overnight rate is currently 2.3%. Prime rate is 4.5%. 5-year fixed mortgage rates are sitting around 6.09. At least that's the post that I think. These aren't cheap rates by historical standards, but they're significantly lower than they were in 2023 and 2024. And that improvement in borrowing costs is part of why sales, I think, are trending upwards. Toronto's unemployment rate is running at 8.1%, which reflects some softness in the labor market. GDP contracted slightly in Q4 of 2025, and none of this is great, but it also hasn't stopped people from transacting. And the spring selling season in 2026 has been meaningfully stronger than 2025. So the economic backdrop is uncertain, but real estate is established in Toronto neighborhoods and has weathered uncertainty before, as we know. And the core dynamic, more buyers than available supply, doesn't depend on a perfect economy to play out. Now, buyer and seller takeaway. So what does this mean if you're actually buying or selling? If you're a buyer, you're still in a relatively favorable position compared to 2021 or 2022, but May's data shows that window, it could be shorter than we think. I don't think so personally, but that's what the data is kind of saying right now. New listings are drying up. Nearly 19% fewer came to market this month versus a year ago. When supply keeps falling and sales keep rising, the negotiating leverage buyers have today could start to shift towards sellers. If you're qualified and you're serious, the time to be thoughtful about your timing is probably now, not after prices recover. If you're a seller, pricing correctly is the entire game right now. That, along with presenting the property properly, marketing, advertising properly, all that matters. The data shows 96% sell to list ratios in CO4 and a 20-day average market time. So it's not a bad market to sell, but there's a gap between what some sellers think their home is worth based on 2022 comparables and what the market will actually pay today. The homes that are moving are priced for where the market is, not where it was. So you want to make sure you're working with someone that understands your specific sub-market or micro market. Now, if you're just staying informed, this monthly video series is exactly what I put out. So you have real numbers, not noise. If you want to understand what it means for your specific property, whether you're thinking of making a move or just want to know where you stand, I'm always available for that kind of conversation. So that's the May 2026 TREB Market Watch breakdown. Again, GTA sales up, supply down sharply, and prices stabilizing. City of Toronto, same story, kind of accelerated. CO4, tight market, fast days on market, and the only area in the city where the HPI benchmark is essentially flat year over year. I'm Anthony Malfara, broker with Royal LePage Signature and co-team leader of the Property Boys. Numbers in the description. If this was useful, subscribe. I do this every month. See you in June.